Hello traders, Jeff the Option Boxer here with a video covering IV Rank today. So before I begin, this video is not a recommendation for you to buy or sell any security. I am not an investment advisor or investment professional of any kind, and you should do your own due diligence and research prior to placing any trade or investing in any stock or option. That being said, let's go ahead and take a look at IV Rank and see very briefly how it may help us. Well, right here we can see I've got a chart of General Motors pulled up. IV Rank is sitting at 29%. Basically what that's telling us is only 29% of the time over the last year has IV Rank been lower than it is today. Okay, well, how does that help us? Well, you can see this green bar and this red bar here on the chart. And I drew this line in here and don't need it. You can see these two bars here on the chart. As a general rule of thumb, when it's above the green bar, IV Rank is considered to be high. When it's below the red line, IV Rank is considered to be low, or in this case, it's just about at the red line, so I would just go ahead and say IV Rank is low at this time. Really and truly, you can look at the number and tell that if IV Rank has only been lower 29% of the time than it is today, that means it's been higher 71% of the time. Well, if it's been higher 71% of the time, then this is in fact low. Okay, so how does that help us? Well, let me tell you two things. When IV Rank is low, you want to be a net buyer of options, or you want to buy your options. If IV Rank is high, you want to be a net seller, or you want to sell the option. Now that does not mean you want to be long. It doesn't mean you want to trade to the upside or to the downside. It just means you want to be a net seller or a net buyer. So let's take a look. Using this number that we have here, IV Rank of 29, without doing any other research, because this tool isn't designed to tell you what direction a stock will go. This tool is simply meant to highlight whether you want to be a buyer or a seller. As a buyer or a seller of options, you can benefit from a move up or a move down, and this tool will help you be on the right side of that particular argument. But please know it will not help you determine market direction. There's probably arguments that could be made that volatility can help you determine market direction, but that's not what I want to convey here in this video. So let's take a look. Using this 29% number, let's take a look at some trades, or hypothetical trades. I'm not going to place any trades today because I haven't done any analysis on General Motors. It's just the first one I saw and I pulled it up. So we want to be net buyers in this particular scenario. We can see implied volatility, or IV for short, is sitting at 24%. Well, 24% based on our IV Rank indicator is low for General Motors. General Motors typically, 71% of the time to be exact, is higher than 24%. So with that understanding, the premiums here are considerably lower than they would be normally if normally existed in the markets. For instance, if this was sitting at 30%, this particular options, this 37 strike put may be worth 78 cents instead of 68. So it has everything to do with the amount of premium you collect, whether you want to be a buyer or a seller. Obviously, if premiums are high, you want to sell, and if premiums are low, you want to buy. And that's exactly what this tool indicates to you without having to look at implied volatility any more than just looking at this tool. It's telling you that 71% of the time premiums are higher, 29% of the time premiums are lower. So in this instance, I'd want to be a net buyer of options. So what do I mean by that? Well, you may just choose to buy a call option. Let's say you thought General Motors would move higher. Well, it may make sense for you to just buy a call option, knowing that only 29% of the time is this option's premium at this particular point less than 71 cents. So, if this was at 20%, or let's say 18%, this might be down to 61 cents. But with option premium low, you want to be a net buyer. So you may choose to buy the long call. You also may choose to buy a vertical spread, and that's why I say you want to be a net buyer. I don't want to be a net seller. Option premiums are low right now, so there would be no reason for you to want to sell any option premium. Option premiums at 36 cents You know, for this particular vertical spread, if this number were higher, if IV were higher, you know, it may cost you 56 cents or 46 cents. It was going to cost you more to buy it. It would be more advantageous. If you thought the market was going to go higher, it would be more advantageous to sell the vertical put spread. You would still capitalize on the same higher movement in the market, but you would receive, because IV is higher, you would receive a higher premium. But basically all we're looking at here with this tool is we're just trying to see whether we want to be a buyer or whether we want to be a seller of options. And at this particular time, if I was trading General Motors, I would want to be a net buyer. I hope that helps. If you have any questions, feel free to reach me at optionboxer.com. Thank you very much. Bye-bye.